All right, so today we're going deep into the world of hedge funds.
Yeah.
Big money, big risks, and
Absolutely.
even personalities.
His personalities.
Yeah. And we're going to be looking specifically at the story of Stephen A. Cohen
Mm-hmm.
and the investigations into his firm, SAC Capital,
Right.
all based on the book Black Edge.
Yeah, a great book.
It's a
Really digs into...
It's a thick one.
Yeah.
Lots of investigative journalism, legal proceedings.
And a lot of personal anecdotes, too.
Exactly.
Which really brings it to life.
It does, it does.
Yeah.
And I think it's important for our listeners, they want to understand complex topics
Right.
quickly but thoroughly. And this story...
This is a shortcut, yeah.
It is a shortcut, yeah.
To a lot of knowledge.
To seeing how this whole industry kind of transformed finance. Really.
Exactly. A real shift in how fortunes were made.
So what we want to do in this deep dive is really extract the most important insights into how these hedge funds reshaped everything.
Reshaped Wall Street, yeah.
The insane amounts of wealth created.
Unbelievable, yeah.
And, of course, the controversies that came with it.
Yeah, the dark side.
Yeah, especially around this idea of black edge information.
Oh, yeah.
At SAC Capital.
Right, at the heart of it.
Okay, so let's start at the very beginning.
Okay.
Cohen, he doesn't come from some,
Silver spoon background.
Yeah, silver spoon Wall Street dynasty.
Right. Not at all.
How does he even get his foot in the door?
Well, he starts at this firm called Gruntle back in the late 70s, early 80s.
Okay.
And a big part of this is he has a childhood friend, Ronald Azer.
Okay.
And Azer is managing the options department there.
Got it.
And he needs people on his team.
Oh.
So Cohen gets in there.
And I've read he was immediately just...
Yeah, totally absorbed.
Drawn to that Quartron screen.
Right in front of it, yeah.
For those who don't know, that's basically the real-time stock ticker.
Yeah, the Bloomberg terminal of the day.
Exactly.
The flow of numbers.
He's mesmerized by those numbers constantly changing.
Totally, yeah.
It's fascinating.
And Azer sees that.
Yeah, Azer picks up on that.
Immediately, yeah.
And what's interesting is their early strategy, right?
Mm-hmm.
It's low-risk arbitrage.
Yeah, so basically trying to find these tiny price differences in different markets for the same asset.
So exploiting these little inefficiencies.
Exactly, and you make a small profit.
Yeah.
But you do it over and over again.
Got it. So it's not swinging for the fences.
No, not at all.
It's more...
Kind of a volume game.
Exactly, lots of small wins.
But even with this relatively conservative approach, Cohen just shines.
Oh, yeah. Immediately.
The book talks about him making $4,000 in an afternoon.
Yeah, and then another $4,000 overnight.
Right, and we're talking 1978.
Right, this is real money.
That's real money back then.
Real money.
And Azer is blown away.
Yeah, he's this guy is a natural...
Yeah, he even predicts that Cohen's going to become famous really quickly. Yeah, he sees it right away.
Which is wild.
It's wild, yeah.
So this early success really shows his talent.
Yeah.
But also... this drive.
Intense drive.
Where did that come from?
Well, it's interesting. You look at his background.
Mm-hmm.
Money was a constant source of stress in his childhood.
Okay.
So he kind of develops this hunger for financial security.
Yeah, he saw firsthand what it's like not to have it.
Exactly. Right.
And the book also mentions his love for poker in high school.
Oh, yeah.
It's not just
he's not just playing for fun.
He's not just goofing around.
No.
He's learning about different ways to make money.
Right.
Comparing it to his jobs as a stock boy.
Versus the potential of poker.
Right, where you can use your skills.
To outsmart people.
Exactly. And that's a really formative experience, it seems.
It seems to be, yeah.
And this ambition spills over into his personal life, too.
Mm-hmm.
His early relationship with Patricia.
Yeah.
He makes these promises to take care of her financially.
Right from the start, yeah.
So it's clear that, wealth is a major goal for him.
A major priority, yeah.
From very early on.
Yeah.
Now, Gruntle itself, it sounds like an intense place.
Oh, super intense.
A real pressure cooker.
Yeah. High seas.
Azer's managing this group of, big personalities.
Yeah, all these traders all vying for profits.
And Cohen, even then, he's already super competitive.
Oh, yeah, super competitive.
And what's interesting is he's not afraid to challenge the norms.
He's not following the rules, yeah.
There's this great analogy he uses.
The Mickey Mantle one.
Yeah.
Yeah, yeah.
He compares himself to Mickey Mantle.
Not batting eighth.
Not batting eighth.
He wants the best opportunity.
Exactly. He's not content to just sit back and wait his turn.
No, he's going for it.
And this trading group, they're making serious banks.
Oh, yeah. Millions every month.
Millions a month.
Yeah.
They even bring in some more aggressive traders.
Yeah, from Drexel, Burnham, Lambert.
which is
the Michael Milken firm.
Yeah, known for their
high-risk, high-reward culture.
Yeah, pushing the limits.
Definitely.
And Cohen starts to realize something. Being a smaller trader, he's at a disadvantage.
Right, especially when you're dealing with these giants.
When you're dealing with Goldman Sachs and these huge firms.
Yeah, they have more information.
They have better access. They have more resources.
Yeah, exactly, and they're using him.
They're using the smaller trader.
To their advantage.
He doesn't want to be used. He wants to compete.
He wants to play in the big leagues.
Exactly.
Yeah.
So by the mid-'80s, his trading volume is so big.
He's doing huge volume.
These firms have to work with him.
They have no choice, yeah.
They need his order flow.
Exactly.
And this fuels his desire to go out on his own.
Yeah, to control his own destiny.
So 1985, he cuts this crazy deal at Gruntle.
Yeah, groundbreaking deal.
He gets to lead his own trading group.
With a huge cut of the profits.
60%.
60%, unheard of.
And a potential bonus on top of that.
It's a huge step towards running his own fund.
Exactly. This is like him getting closer to that dream.
Total control.
Total control.
Yeah.
But even in these early years, there are hints of trouble.
Yeah, some shadows.
The book mentions him sharing stock tips with his brother Donald.
Right.
Specifically about RCA in December 85.
Based on this rumor of a restructuring.
Right, and this leads to the SEC getting involved.
Yeah, an SEC investigation.
Investigating trading in RCA stock. And Cohen gets deposed in June 86.
Yeah, they bring him in for questioning.
And Gruntle hires this high-powered lawyer, Otto Obermeyer.
A big name, yeah.
Which shows how serious this is.
Absolutely.
And what's interesting is how the book describes these legal tactics.
And the depositions, yeah.
Like they're being super careful with their wording.
Right, not explicitly invoking the Fifth Amendment.
Right, but still like dancing around the question.
Dodging and weaving, yeah.
It's a real high-stakes game.
It is, yeah.
And Cohen's response to all this is basically...
He's like, I'm just a trader.
Yeah, I'm just a trader.
I'm frustrated.
Why are you bothering me?
Yeah.
And it's almost like foreshadowing later events, where he seems to kind of distance himself
from the details,
from the inner workings of his firm.
Interesting. Yeah.
So let's fast forward a bit.
Okay.
To this rise of hedge funds.
Yeah, this is key.
They become this dominant force in finance.
Yes, yeah.
And the potential for wealth.
It's just staggering.
It dwarfs traditional Wall Street careers.
Oh, yeah, by far.
The book gives this crazy example.
From 2006?
Yeah. Where even the CEO of Goldman Sachs,
the top dog,
is
making way less than many hedge fund managers.
Than the top hedge fund guys.
The top guys are pulling in over $1 billion a year.
$1 billion a year.
Cohen is among them.
Cohen's right there with them.
Right at the top.
And by 2015, hedge funds globally are managing almost $3 trillion. $3
trillion.
It's a huge part of this growing wealth gap.
A huge factor, yeah.
And Cohen, he really embodies this whole phenomenon.
He personifies it, yeah.
His track record is insane.
About 30% annual returns for 2 decades.
30% year after year.
Consistently.
For 20 years.
Unbelievable.
It's crazy.
And what's really fascinating is that he doesn't have this clearly defined strategy.
Right, like some other big names.
Like a George Soros or a Paul Tudor Jones.
Right. They have their thing.
Their specific approach, yeah.
But Cohen's different.
He's much more intuitive.
Yeah, he's not tied to any particular philosophy.
It's almost like he can feel the market.
It's almost like a sixth sense.
Yeah, for short-term movements.
He's buying and selling rapidly.
It's super fast, yeah.
And this just adds to his mystique.
It's a mystery.
It's a mystery. Like, how does he do it?
Nobody knows.
So now you have all these traders.
Aspiring traders.
And wealthy investors.
They all want to be in on the action.
They want a piece of the pie.
Yeah.
By 2012. SAC is one of those profitable hedge funds in the world.
Top of the game.
Managing $15 billion.
$15 billion.
And Cohen has become this almost mythical figure.
Yeah, Stevie.
On
Wall Street.
It's like a legend.
Legend, yeah.
But this success, it creates a new problem. Competition.
Tons of new hedge funds popping up.
Everyone's trying to get an edge.
And the stakes are getting higher.
And that leads to some extreme measures.
Oh, yeah.
The book mentions everything from hiring scientists to like...
unconventional data collection.
Yeah, like analyzing what soccer moms are buying at Walmart.
Yeah, and satellite images of parking lots.
It's wild.
Anything for an edge.
It's a whole new level of intensity.
Absolutely.
So now Cohen's trading group It evolves into this major entity.
Officially becomes SAC Capital in 1992.
And with that size comes more scrutiny.
Yeah, you can't fly under the radar anymore.
At first, even the big Wall Street firms.
The J.P. Morgans of the world?
Yeah, they're suspicious of SAC.
You're hearing these rumors.
About these impossibly high returns.
Yeah, it's like too good to be true.
Right, and some even refuse to do business with them.
They're like, we don't want to get involved.
It's too risky.
Yeah, too shady.
And there's this great story in the book.
Oh, yeah.
About Cohen buying a house.
Flipping a coin.
He flips a coin to decide whether to buy it.
And then he outbids the other guy by a mile.
Yeah, like way over the asking price.
It's just aggressive in every aspect of his life.
It's not just business.
No, it's everything.
It's his whole mindset.
Yeah.
And then there's the whole thing with his Greenwich mansion.
Oh, yeah.
These massive renovations.
Pissing off the neighbors.
Yeah, the old money crowd is not happy.
They don't like this flashy new guy.
It's this clash of cultures.
Old wealth versus new wealth.
Exactly.
Yeah.
And inside SC, things are also changing.
The dynamics are shifting, yeah.
You have these key figures like Lee Grodin.
A more experienced trader.
Yeah, and he's really good at developing talent.
He brings up this analyst, Richard Chubing Lee. CB.
And the book contrasts Grodin's style.
More methodical.
Very research-driven.
To Cohen's more impulsive approach.
Yeah, Cohen's all about gut feeling.
Fast thinking, rapid decisions.
And then you have these younger guys coming up.
Yeah, David Gaddick.
Michael Grossman, a.k.a. Millhouse.
Millhouse, yeah.
Because he's not the most popular guy.
No, not at all.
But Cohen is fascinated by him.
Yeah, it's strange.
Even though Millhouse is kind of abrasive.
Yeah, rubs people the wrong way.
Cohen is willing to take trading instructions from him.
Which is really unusual.
It's unusual, yeah.
For someone like Cohen.
He's supposed to be the genius.
The legend.
But it shows his focus.
Yeah, he just wants to make money.
It doesn't matter who the idea comes from.
As long as it's profitable.
Exactly.
Yeah.
And then you have Cohen getting into the art world.
Oh, yeah, with Sandy Heller.
This art dealer. And it's not just about collecting.
There's more to it, yeah.
It's about reputation.
And potential profit.
Yeah, like buying Damien Hirst's shark.
The one in formaldehyde?
It's a statement.
It gets people talking.
It gets people talking.
For sure.
So now we're getting to this critical point.
Mm-hmm.
The insider trading investigations.
Yeah, the walls are closing in.
So there's this growing emphasis on quarterly earnings.
Yeah, Wall Street's obsessed with it.
And traders are trying to anticipate those announcements.
Before they're public.
To get an edge.
Exactly.
Then comes Regulation FD in 2000,
mm-hmm.
which was supposed to level the playing field.
Make information available to everyone at the same time.
But it has this unintended consequence.
It makes traditional information less valuable.
So now some traders are looking for other edges?
The more private kind.
Yeah, sometimes crossing the line.
Into illegal territory.
And this is where someone like Jimbo comes in.
This lawyer.
Yeah, he's a commercial litigator.
Mm-hmm.
And he starts investigating SAC.
On behalf of some companies.
Yeah, companies like BioVale and Fairfax Financial.
They think their stock is being manipulated.
They're suspicious.
Yeah.
And Bo meets with this FBI agent, BJ Kang.
A key meeting.
And he lays out this whole idea.
Of an insider trading business model.
In the hedge fund world.
Yeah, it's becoming the norm.
He's arguing that the regulations haven't kept up.
With this fast-growing industry.
With the lack of oversight.
It's the Wild West out there.
And it's interesting to think about these earlier regulatory actions.
Like Elliot Spitzer's investigation.
Into Wall Street research.
Yeah.
They were supposed to address conflicts of interest.
Right.
But some argue they actually push things further underground.
Made people look for even shadier information.
So now let's talk about some of the key players.
In the investigations, yeah.
You have John Horvath, an analyst at SAC.
He's actively seeking out trading ideas.
Based on upcoming events.
Earnings announcements, that kind of thing.
And then there's Noah Freeman and Donald Longoy.
Also at SAC.
They later become cooperating witnesses.
Key witnesses, yeah.
And the book talks about these information sharing networks.
Yeah, these informal networks.
Between analysts and traders.
Sharing tips, rumors.
And they're constantly debating.
What's legal?
What's white edge?
Public information.
Versus potentially illegal stuff.
Crossing the line.
And all this is happening while the government is going after other firms.
Like Galleon Group.
Yeah, with Roger Atnam.
The big insider trading case.
And they're using cooperators like Richard Slane.
To build their case.
And wiretaps are becoming a big tool.
Yeah, listening in on conversations.
Then you have Jesse Tortora.
At Diamondback Capital.
He forms this kind of inside information fight club.
Sharing secrets, yeah.
And Ron Dennis. another SAC analyst.
He's so paranoid.
He only communicates by phone.
He's afraid of being recorded.
He knows they're listening.
Yeah.
It's a tense atmosphere.
It is, yeah.
So let's take a step back.
Okay.
And look at Cohen's daily routine.
At this point.
Yeah. And the intensity at SAC. The guy starts his day early.
Studying the markets at home.
Before even getting to the office.
Yeah.
Often with a bodyguard.
He's got security.
Yeah, he's a high-profile target.
Absolutely.
And his trading station.
It's like a cockpit.
With tons of monitors.
All these screens with data.
Real-time information.
Flowing in constantly.
And even his personal schedule.
He's built around trading hours.
It's all about the markets.
Yeah, he's obsessed.
The book even describes how SAC used these aggressive trading tactics.
Oh, yeah.
Like in the case of Nextel stock.
To potentially manipulate the price.
They have so much power.
We can move markets.
It's scary.
It is, yeah.
So now let's focus on this specific investigation.
Involving Elon and Wyeth.
These pharmaceutical companies. Matthew Martoma.
He joins SAC's CR intrinsic unit.
As a healthcare portfolio manager, and he's really driven.
He wants to prove himself.
He's ambitious.
Absolutely.
And he zeroes in on this drug.
Rapinuzumab or BAPI.
For Alzheimer's.
Yeah.
Developed by Elon and Wyeth.
A potentially huge drug.
And Martoma, he's had this interest in Alzheimer's for a while. And he's really bullish on BAPI.
He thinks it's going to be a success.
Based on this upcoming trial data.
He gives both Elon and Wyeth a conviction rating of 9.
Which is like...
the highest you can go.
Super high confidence.
Yeah.
But there's pushback within SAC.
Some of the senior analysts are skeptical.
Yeah, people like David Munro and Ben Slate.
They're worried about the risk.
Investing so heavily.
Based on one drug.
It's a gamble.
It is, yeah.
But Cohen trusts Martoma.
He believes in him.
He even tags him for the profits.
So Martoma gets a bigger cut.
If it works out.
Yeah.
And this creates tension within SAC.
People are not happy.
Jealousy, backstabbing.
It's getting ugly.
And the term black edge.
Starts to get thrown around.
Associated with Martoma's information.
Like he has something special.
Something illegal.
Yeah.
So let's talk about the trial data.
The big reveal.
Dr. Sid Gilman.
He's a consultant on the trial.
He gets the full presentation slides.
On July 19th, 2008.
Under strict confidentiality.
He's not supposed to share this.
But he's excited.
He sees something in the data.
And he immediately calls Martoma.
To discuss the findings.
He shares both the positive stuff.
And some concerns he has.
About the placebo group.
And the lack of a clear dose effect.
Now the next morning, Sunday, July 20th.
Martoma urgently needs to talk to Cohen.
They have a 20-minute phone call.
And right after,
Martoma emails Cohen.
Detailing their massive holdings.
Billion-dollar holdings.
In Elon and Wyeth. And Cohen immediately tells his top trader.
To start selling Elon. Before the news gets out.
Before the trial data is public.
Yeah.
And it's worth noting that around this time.
SAC has this insider trading training.
Led by Harvey Pitt.
Former SEC chairman.
But Cohen's meeting with Pitt afterward.
Is brief and perfunctory. Like he's not really taking it seriously.
Not engaged at all.
So these Elon and Wyeth trades, they trigger the SEC's involvement.
They get a referral.
Someone tips them off.
Yeah.
And they estimate that SAC made
$182 million
in illicit profits and avoided losses.
Huge numbers.
And the FBI is also investigating SAC.
They're looking into Rajaratnam,
who's seen as a competitor to Cohen.
Yeah.
And C.B. Lee, the former SAC analyst.
He might have some inside info.
But wiretapping Cohen is difficult.
He's very discreet.
He spends a lot of time in the Hamptons.
Out of reach.
And there are rumors that SAC portfolio managers
use coded language
to avoid detection.
It's like a spy movie.
It is, yeah.
So the SEC investigation,
led by Charles Riley, focuses on these Elon and Wyeth trades.
They're digging deep.
And there's a parallel criminal investigation
led by Preet Vara
after Rajaratnam's arrest.
Yeah, the heat is on.
And now Patricia Cohen. She finds this old lawsuit
from their divorce
where Cohen seems to have undervalued a real estate deal
to get a better settlement.
It suggests this pattern of behavior.
Putting profit above everything.
And after Rajaratnam gets arrested,
other hedge fund people are freaking out.
Like Samir Barai.
He's destroying evidence.
They're all worried.
They know the government's coming.
And then in November 2010,
they arrest these employees from Diamondback Capital.
It's a sign
that they're going after the whole industry.
It's not just Galleon anymore.
The net is widening.
And now former SAC employees start cooperating.
Like Noah Freeman.
He spills the beans on SAC's internal communications.
And he tells stories about Cohen.
That raise questions.
About his knowledge of inside information.
Like this one time.
SAC goes long on financials.
Right before the government nationalizes Fannie Mae and Freddie Mac.
Very suspicious timing.
And this leads to the formal investigation into SAC.
They're finally going after Cohen.
And Riley, the SEC guy, he gets a big break.
In the Elon case.
Sid Gilman's phone records.
Show all these calls with Martoma.
The doctor and the trader.
Connected.
And more referrals are going to Congress.
About suspicious SEC trades.
Including Elon and Wyeth.
They're building a case.
And the FBI, they go to Sid Gilman.
And they drop a bomb?
They tell him that Martoma used a different name.
Ashai Thomas.
Earlier in his life.
It's a shock.
Gilman's reluctant at first.
He doesn't want to cooperate.
But they convince him
to tell them everything.
And the SEC finds this crucial piece of evidence.
The phone call.
The 9:45 a.m. Sunday morning phone call.
Between Martoma and Cohen.
Right before SAC dumps all their Elon stock.
It connects Cohen directly
to the inside information.
It's a smoking gun.
And then Martoma, when the FBI confronts him,
it faints.
He passes out.
It's dramatic.
It's like something out of a movie.
Yeah.
So to recap, we see this incredible rise of Stephen Cohen.
An SAC
fueled by aggressive trading.
And this relentless pursuit of information.
Sometimes pushing the limits.
Bending the rules.
And we've seen the evidence piling up.
Of suspicious trading.
Especially around this Elon and Wyeth drug trial.
Yeah.
And these key witnesses.
Like Sid Gilman.
They're initially reluctant.
But they eventually cooperate.
And that phone call?
The Sunday morning phone call.
Between Martoma and Cohen.
It's a huge moment.
It's a turning point in the investigation.
Yeah, a real aha moment.
But this is just the beginning.
I have a much bigger story.
This is a 7-year investigation.
Full of twists and turns.
So I want to leave you with this thought.
Mm-hmm.
Given the insane amounts of money involved.
And the pressure to win.
How common do you think this black edge information really was?
In the hedge fund world.
And what does it say about the system?
About fairness and trust.
This is just a glimpse into Cohen's world.
And it makes you wonder what happened next.
What happened to SAC?
What happened to Cohen?
That's for another deep dive.
Another time.
Another time.
Yeah.
But this is just the tip of the iceberg.